What's up, guys? Brendan from Market Makers. 1 o'clock Eastern Time. Happy Monday, everybody. It's freezing here in Florida. Where I'm at, it's about 40 degrees. Last week it was in the 30s. There was like frost on the ground, so it's very culturally shocking for me. But guys, let's jump into the Bitcoin price action. As you guys know, I use Wyckoff and Fibonacci for my trading style. So I've been using Wyckoff a long time. Yesterday, I did a deep dive in our room on the accumulation cycle itself. This DARVAS box right here for accumulation. 5 key phases. I want to share with you guys the highlights because I want to answer some of your questions you're asking in the YouTube comments. I try to reply to as many as I can. Guys, the bottom line everybody wants to know is what? Is Bitcoin going up or down, right? Nobody wants the extra TA. They just want to know whether Bitcoin's going up or down. But guys, so we've been over this in the previous videos. The primary trend of Bitcoin is up. Okay, when is it not up? Well, we have 2 key indicators. If we lose 41,310 and then we lose 39x, I say 39x, these numbers will vary depending on your exchange. This is BitGet. 41,310 is a massive warning sign, and it come down to 39x, the bottom of this reaccumulation box. If you lose that, you will be making lower highs. Bitcoin could assuredly still pump, but I don't think you're making all-time highs at that point if you lose 39, okay? So just keep that in mind. So what Bitcoin's doing now in accumulation is bullish in the Wyckoff method. It's supposed to be doing exactly what it's doing. We're going to drill down to the 4-hour time frame, and I'll share with you these phases, okay? So understand how we got there. In the distribution box, you have a buying climax candle. Okay, this is part of VSA, volume spread analysis. Tom Williams made this famous, but this is part of the Wyckoff method. You have a hard rejection wick. I want you to see that because you have it on the bottom where you drop too. You have a selling climax candle, and you see this repeated over and over. Selling climax candle, accumulation is entered, okay? So let me show you this in a 4-hour time frame. It'll make a little bit more sense. Go ahead and fast forward here. We're going to do something different that Wyckoff could not do, which is use Fibonacci. Fibonacci is going to give us the exact support and resistance points. Guys, to save time, I went ahead and did this, but I used a basic fib retracement from the swing low of 41,310 to the trend high, and from the all-time high, the beginning of our impulse wave. Remember, you want to get the beginning of your impulse wave right here from the all-time high to the swing low, and it gives you this sandwich effect, okay? Let's talk about the hallmarks of entering accumulation so you understand how we are in accumulation. Last line of support. Okay, this is all part of Wyckoff method. Last line of support. This is when price has a meeting with supply and demand. Supply won, and guess what? Price dropped. This is also when retail realized they were getting dunked on. Retail didn't realize it at first because you can see that in the price decline. We had a 40% decline from the all-time high to that swing low. 28% of it is this series of candles. Because guys, looking at it backwards, Monday morning quarterback, as we say in America, this decline is very obvious. When you're over here trading, what you get bias, market bias. If you're bull biased, you're thinking 300K Bitcoin. We just hit 69K. If you're bear biased, you're like, oh, the 618's right here, for all of us Fibonacci Elliott wave traders, but we pumped 3,000 points past the 618. A lot of people got stopped out, including myself. I had to re-enter the trade, which I did somewhere over here, I believe. And then you get this nice markdown, wave down, okay? This is markdown. This is part of Wyckoff. So let me get rid of this. So we have last line of support, as I denote it right here with the red arrow. This is the entrance of phase 1, guys. Phase 1 in the accumulation cycle. We have our selling climax candle I showed you on the weekly time frame. Hard rejection wick. This wick creates the reactionary rally, which establishes a top in your current trend. You then pivot down to the bottom in your current trend, okay? This is the end of phase 1. That is phase 1 in accumulation cycle, okay? Phase 2, let me get rid of that arrow. Phase 2 is this block right here. This is phase 2. What is phase 2? Phase 2 is higher volatility, wider volume spread, and most importantly, retesting the ceiling that you established in phase 1. Okay, you see that? So that's phase 2, and you can see this in your current indicators. Guys, I'm going to show you an example of this on the weekly time frame after I get done talking about it. You can see this in your ATR as well. This is the beginning of phase 2. We had wider volatility spreads, and you can see it in your volume, the big pickup in buying, and then the selling, but the selling is less pronounced than the buying. The stabilization of price, you're entering phase 3 at the moment. Phase 3 is going to be looking for a new bottom, retesting your support. This can happen a couple of different ways. I showed you guys a dragon pattern. Very important to understand the Wyckoff method, okay? Each of these cycles has phases within the cycle. So when you're looking at this for price behavior, what price could do is just come down to the 618, pivot, and start getting some bullish candles back up, okay? But oftentimes what you will see in the accumulation cycle is price will do a deeper retracement, okay? This becomes a lot of things. This becomes a massive trap for people entering shorts. This becomes a bear trap. People think Bitcoin's falling apart. You've been trading in this range for a month. All these candles, nothing's come below it. And imagine if you're using a rectangle, guys. If you're just using a rectangle like so many people on YouTube do, they do this, right? They don't use fibs. They just say, this is our support box. Look at this. Every time price hits it, we're going to go up. So imagine if you're doing TA in that fashion and price comes down into your support box, and instead of doing this, like it's been doing over and over for a month, it does this, right? This creates max pain. People enter shorts, people sell positions, and then what could happen is you get a Wyckoff pivot. This is why we use Fibonacci patterns to find these pivot points. Wyckoff pivot and massive bullish candles, and you don't have to take my word for it. I'm a pattern trader. Bitcoin has done this multiple times. Look at your accumulation box. Selling climax candle, hard rejection wick. You have your ceiling and retest of the ceiling. You have a bottom, and then you come back down to retest your bottom. This is a weekly time frame. Wyckoff pivot. This is when I came into the market after this May 12th dump. Lots of people thought Bitcoin was falling apart here, okay? You had a new low, and then you had this bearish candle. Look at this. You retest at the bottom, Wyckoff pivot, and here you go. That's the Wyckoff spring, okay? Jesse Livermore called it a pivot point. Wyckoff spring, big bullish candles. You see it over and over again. You see it in the accumulation box. There's your ceiling. There's your bottom retest. These candles right here. Again, this is a weekly, so it's less candles for examples. But then you go Wyckoff pivot, Wyckoff spring, and you have a big markup, okay, into your distribution box. So I expect to see the same thing play out here, okay? We have our bottom tested, 41,310. Look at the range of candles. Nothing's come down that low. I expect the candle to come down. Doesn't have to come to 41,310. Could be somewhere in the middle. And this is going to be our pivot point, our Wyckoff spring to going up into the next box, okay? That's what we're tracking. That's what I'm looking at. And guys, something to show you here. Let me go ahead and draw this out. Phase 3, as I said, will be retesting the bottom. So if we look at our key marks here, this is something fascinating and amazing that Wyckoff did, and you should really appreciate this genius. So you have your bottom established, okay? Your clear bottom. This is a selling climax candle, which creates a reactionary rally, which establishes a ceiling in the trend. You then retest the bottom of this trend, or form the bottom of the trend, I should say. You then retest your ceiling. So now you are looking for a retest of your bottom. Okay, let's just say that retest of the bottom anywhere right here. Do you guys know what this is? The guys in my room will know what this is by looking at it, other than the fact that it looks like a die, you know, like dice, like the game. This is a couple of different things. Now remember, Wyckoff lived before Gartley and before Gann and before Ralph Nelson Elliott, okay? Gartley had the impulse wave and essentially an ABC correction. Look at this. So he just gave you a touch point system here. You have your impulse, your A, your B, your C correction. Or if you're using a wave count, you have wave 1, wave 2, wave 3, wave 4, wave 5 is out, okay? This is a couple of different things. In Fibonacci pattern trading, let me draw that back. In Fibonacci pattern trading, this is quite simply a 5-point pattern. This is how we trade in the room, if I can find my tool. And these are patterns that I've been talking about with you guys, okay? I don't have the magnet on, so it'll be pretty close. But these are just 5-point patterns. This is the whole point of Fibonacci pattern trading, and you're seeing it displayed in Wyckoff in the accumulation phases, okay? This would actually come down to like the 886, right about there. I drew that freehand. That's pretty good. And at that point, as I've said many times, when you complete this bullish pattern, which people don't understand, it's a counter trend pattern, price would go up. This is why we track price for Fibonacci. What's amazing is Wyckoff wasn't using Fibonacci. He realized this with mathematics and with just patterns that keep repeating themselves in the different phases in the Wyckoff method. So he basically gives you a Fibonacci pattern that we trade. This is a Navarro pattern, and you can see where price would potentially reverse. And of course, we have a range for this pattern. It could be up at the 618, could be all the way down here, could be slightly past the 41,310, which would take you to 39. This is why pattern trading, Fibonacci pattern trading, understanding how the greats of our time trade it is so important, because these were the best traders, the best methods. We have indicators that do a lot of the hard work for us. They didn't have this, okay? But these guys were geniuses. So really fascinating stuff. And if we go forward, projections, where could price go? If we do go up, okay, because all indications are that Bitcoin's going to pump. We're in an accumulation phase, and we're looking to complete phase 3. Phase 3, by the way, if I show you, I'm sorry, I'm jumping all over the place, but if I show you what phase 3 is, once we find that final retest at the bottom, phase 4 and phase 5. Phase 4 will be your markup, okay? Phase 5 will basically take you to a reaccumulation box potentially, or just more markup, okay? So it's just basically signs of strength is what Wyckoff called it. That's all it is. So it's just more signs of strength, and within that you can have retests and ranges, but that's all very specific stuff. We don't have to get into that. Macro speaking, for the Wyckoff method, we're looking for a retest to the bottom. Phase 3 will be complete, and then we're going to be looking for phase 4, which is going to be our Wyckoff spring, and then going up, okay? Signs of strength after the Wyckoff spring will be phase 4 and going into phase 5. So let's go ahead and look at where our potential targets could be. This is the trend based fib from the market low 28,790 to the market high to our current low of 41,310. 618's at 66,234, which gets you above all of this mess. The 0.5 gets you above this first cluster. The 618 66,234 gets you above this last resistance, and then you're just dealing with that peak. And of course, look at the confluence. Okay, this is the three valleys pattern, the market structure target 108,946. Look at the confluence with the 1618, 106,564, within $2,000 of each other on a 100K plus asset. Guys, this is pattern trading. One thing I want to show you again, when could this happen? Using the Fibonacci summation series, we have fee confluence here at January 6th, we complete 2-5 series here, and then January 7th could potentially be our pivot point. Today is January 3rd. One thing I do want to note, guys, and this is totally my fault, on my charts, I label my charts, this is my 55,233. This was actually the 21 EMA, not the 55. I've corrected it, and my other charts that had the 55 was actually 21. Brief moment of dyslexia. I do apologize for that. So the death cross is still a potential. It's still relevant, but as you can see, it is multiple days apart. It is not laying right on top of the 233. So that's my fault, guys. But guys, I hope you enjoyed this TA. Check out our room. The link is in the video description to our Discord, and check out BitGet, our sponsor, top 5 exchange by volume, super liquid exchange where I do all my trading. Bonus link is there in the video description. And guys, give us a follow on Twitter. Ricardo would really appreciate that. I have him managing the Twitter. We interact on there often. We publish out charts. We talk on there. So check out our Twitter. And of course, our Discord does have a free site. If you want to come join the free chat, we pop over there and talk to the free members as well. All right, guys, take care. Have a great Monday.